to host the panel about financial analysis and economics of enterprises. I will try to explain those financial concepts as much as possible, with a particular focus on free market economies. I realize this is a very large topic and we do not have too much time. That's why I prepared some materials for you and you can read a little bit more about it. But here for this meeting, I will just concentrate on the most crucial items, on the best practices, on some examples for you to be able to comprehend the material easily. I would like to share my screen with you so that you can see my presentation. I would like some feedback from you, whether you can see everything, whether there are any technical problems. We seem to be having a lot of them today. All right, can you see my presentation? This is the first slide with the title. All right, today we will be talking about financial analysis and financial management of companies. I'd like to present very briefly the agenda for today. First, we will talk about the economics of an enterprise, about the business environment, about marketing, which is one of the crucial aspects that enables companies to reach the consumers and the buyers of their products and services. There is also the concept of competition and regional policy that have an effect on an enterprise. Then we will move on to discussing financial analysis, and we will be covering three different documents. One of them is balance sheet, then there's also the profit and loss account and the cash flow statement. Later, we will be discussing ratio analysis, and I will present the key concepts that you should pay attention to when you look at the ratio analysis. And also, I will tell you about the advantages of ratio analysis over pure data. All right, let us begin. The economics of enterprise. Here in this slide, you can see a definition of organization of an enterprise. Organization is an organized way that's organized system composed of four elements. One is the goals pursued by an organization and the certain tasks that arise from those goals. Most companies have the derivation, well, earning profit is the major goal for most organizations. And in order to do that, they need to complete certain tasks. Therefore, these tasks must be defined precisely, especially for different people in that organization, which means the people working for the organization. In companies, when we talk about companies, we cannot forget about the organizational structure, which means how the company is organized, what parts it is composed of, what levels it has. There is also a very important and vital part of the organization, which is the people. with individual and with their collective endeavors and behavioral patterns. And what I mean here are people in the full meaning of this word, which means people who have certain behavioral patterns and who, so the people are, the organization takes advantage of certain features, characteristics of people to achieve the organization's goals. What I mean by that is that, for example, there is a person who had some leadership skills, and this person will be best suited to work as a manager rather than simply do some repetitive job on a daily basis, data collection or production at the assembly line. Of course, when we talk about organizations, there is also technical and infrastructure and some materials that the organization has and some technologies. Important to mention is that innovative technologies are very important right now, and this is an area in which companies compete against each other, and it is the technologies that gives you a competitive edge over other businesses. But there is also the fourth element, which is the formal structure, which is a set of rules of how the work is given to people, what responsibilities are assigned to people. So the organizational structure streamlines the relationships at work and relationships at an enterprise. For example, in the financial or banking sector in Poland, there is usually information about organizational structure on the website. This is dictated by the regulations to which banks have to conform. So that means they simply have to show the organizational structure of their bank or a larger organization. There are various ways in which a company can be organized, and there are some formal organizations, and they are most prevalent in the private sector. In the private sector, companies usually simply work to achieve profit. There is also the public sector, in which companies or organizations owned by the state operate. They are largely held by the government or by local governments. And there is also this non-governmental sector. And in this sector, we have social organizations, cooperatives, non-profit organizations, foundations. So their main goal is not to achieve profit, but to pursue their goals, achieve their objectives. And here we have in this segment some foundations, and they are not for profit, they are just to do some, for example, charitable work. And the cost and revenue, there should be a balance between them. They shouldn't be able to generate profit. And this is true for non-profit organizations. And if they do have a profit, which means their expenses were smaller and their revenue was greater, revenues such as contributions or donations, then of course that revenue will be used in the upcoming financial period. So there's no profit for them. What is a company? What is an enterprise? An enterprise is an organizational unit that pursues business activity, and it is separate by means of its legal form, by means of its organizational structure. It operates on a certain territory and it's economically independent. An enterprise, of course, has there are major types of business activity that an enterprise can pursue. And the most typical is the commercial activity, which means a company buys goods and then resells them with a margin. There are also companies or enterprises that offer services such as hairdresser salons. They do not produce anything, they do not manufacture anything, they simply offer services. And if you pursue a typically service-based business, uh, then you can also sell some product. For example, in a hair salon, you can purchase a shampoo or cosmetics. So this is a combined type of activity. And there is also the third type of activity, business activity, which is production, manufacturing. An enterprise buys certain goods, then they process the goods or transform them into final products and then resells them to customers. This is different from commercial or service business. Of course, an enterprise can have a combination of various activities. Let's say they both sell products, offer services, and they manufacture some items. It's very well possible in a given sector. So it's possible to combine all three types of activities. Most often, the reason for this is the company's commercial policy. A company that manufactures products, and this is their major type of business, it may also purchase products to be processed, and they let's suppose they bought more than they need, that they can process by themselves. Why is that? Sometimes if you buy in bulk on the market, then you get a more favorable unit price. Therefore, it's more beneficial for you to buy more. And let's suppose the enterprise bought more items to be processed that they actually need, and they are going to process some of the product, but the surplus can be resold to final customers, which means they do not only engage in manufacturing, they can make money on trade activities, and they can make money on manufacturing activities. So when there is a combination of different types of activities, each enterprise that manufactures products and sells the products to customers, they may also offer services. For example, maintenance of the product that they manufactured, which means we have all three types of activity in one enterprise. And what I mean here are the maintenance services for a fee, not under the statutory warranty, which is, of course, free of charge. So, when there is an enterprise that has a combination of different activities, it may very well function on the market. There are certain legal regulations that companies must comply with, and they are mostly defined. Zmutował się. Unfortunately, we cannot hear the speaker right now. I'm sorry, I experienced some technical problems, but right now I think we should be fine. Let me repeat my last sentence because I don't know how many of you had a chance to hear me. Coming back to the business activities of an enterprise. So each enterprise is has to conform to certain legal framework that is effective in a country in which the enterprise operates, because it's the country that determines how an enterprise should function. And there is, of course, this concept of economic freedom. And we should ask ourselves the question, should a government and the state interfere with how the enterprises operate, or should they be left a lot of freedom, and should they simply operate on an open market and free market? And a state should, to some extent, regulate how a market operates in a given region. For example, they should definitely define how weapons or hazardous materials may be traded, or for example, there should be certain laws that prohibit the use of drugs and the sale of drugs or the sale of weapons. When there's for the weapons, in order to sell them, you have to have a license, or at least this is true for Poland. And these are those very obvious boundaries that are defined by the state, by the government. But we may ask ourselves, where does this freedom of economic activity end? How much can a state interfere with how a company or enterprise operates and how the market operates and functions? Of course, a state usually has a certain goals it wants to achieve. Let me give you a brief example. The legislation, the EU legislation, the EU laws in most or almost all EU states regulate the issue of lending money to consumers, especially for people who take a loan not for their business activity but for private activity. There is an EU directive that defines how a loan may be given. So there is a lot of information that a bank is obliged to provide to the consumer, and the loan agreement must be formulated in a special way. It must have some obligatory clauses. And we may ask ourselves, why does the state, or maybe not the state, but why does the EU want to determine how a loan should be given to an individual? And the answer is that the EU offers protection to consumers. However, there is a broader context of that protection. A state wants the people who take a loan, the borrowers, not to fear taking a loan from a bank, because this loan money is usually used for consumption, buying a TV set, buying a washing machine, or even a car. And the state wants a consumption in a given state or in a given country to reach a certain level, because each customer, each consumer buying a product pays simply 10% taxes and helps to earn profit both for the company that sold that product or that car, but also pays some mandatory taxes to the state. So first of all, the consumer buys a car, then the consumer will have to buy fuel for the car, and let's not forget that the fuel price includes a number of taxes, and later on, this person pays for the repair of the cars.
And so, as a result, all of our decisions, all of our purchasing decisions produce income, produce revenue for other people. So, the free market economy is a system of combined vessels. And I am certain that you have already noted the problem resulting from the pandemic. Even though only certain sectors of the economy are vulnerable to the COVID pandemic, such as hospitality or tourism or hairdressing or restaurants, these are the sectors that are directly impacted by the pandemic. However, since the economy as a whole is a system of combined vessels, persons who offer services like tourist services or restaurants, if they lose their sources of revenue, the sources of income, they will also stop being able to make purchases and they will stop being the source of revenue for other branches, for other sectors. So, as a result, the coronavirus pandemic may not only bring about a healthcare crisis or a crisis in the medical industry, but it may cause an economic crisis as well. We are already talking about the impact of the pandemic on our economies, but it is still too early to assess what the impact actually will be. So we need to be patient and wait and see what the situation is like in a while. Insofar as the types of business activity are concerned, I have mentioned already a minute ago that enterprises may combine the type of activities within the business, but the types of activity are often collaborating in themselves with themselves. So the trade enterprises would be the clients of service enterprises or the production. Obviously, enterprises would sell the goods to trade enterprises. So a trade enterprise may distribute products manufactured by production businesses, while service enterprises may provide additional services both to trade companies and to production companies. Manufacturing production companies may also offer services within their own structures or may contract such services to another business, to a third party outsources. Likewise, trade companies, commercial companies, they may also need some services. For instance, services regarding the examination of complaints. If a commercial, a trade company such as a wholesaler is obliged to guarantee the quality of the goods that they sell, if it turns out that a product has had some sort of undisclosed defects, the trade company is under some circumstances obliged to repair the goods and is not always able to do it on its own. It doesn't always have relevant staff or appropriate tools and materials. So such services may be contracted elsewhere. As a result, all of these types of activities can be combined within one enterprise or may be provided by a variety of collaborating enterprises separately. And off to another classification of enterprises. The next type of classification relies on the size of an enterprise. It is important because very often state aid or various types of assistance measures, especially from the European Union, are dedicated to specific groups of companies depending on their size specifically. So we have assistance that's dedicated to micro enterprises, small enterprises, and assistance that is allocated to medium or large companies. Why? Why is it so? Well, the reason is the dispersion of risk and the professional activization. What does it mean? Let us imagine that we have a large company that employs 1,000 workers. And let us compare this company to a micro company that employs not more than 10 persons. In fact, in order to compare the employment, the engagement of the two enterprises, we would need to compare 100 micro enterprises to one large enterprise. And if one large enterprise goes bankrupt, if the enterprise is really big, 1,000 people are left without any work. And if it's only one micro enterprise that goes bankrupt, well, 10 people lose work, but 990 are still employed. I do realize that it is a highly simplified example because crises very often affect entire sectors or entire territories. However, small enterprises and medium enterprises are much more flexible and much more capable of conversion than large enterprises that would need millions and millions of euros to maybe reconvert buildings, purchase new machines, and sometimes also train workers, thousands of people, to do different tasks. Meanwhile, small enterprises are able to switch the sector relatively easily at a much lower cost. And as a result, the risk of such assistance is much more dispersed, and as a result, it is simply lower. As a result, the European countries, but insofar as I know, countries all over the world try to support small and medium enterprises. There have been many programs that are meant to activate people who are unemployed and encourage them not only to maybe switch their profession if they cannot find any job in the profession they have trained for. But there are so many programs that encourage them to start their own businesses so that one person who starts a business may run that business as a sole entrepreneur, as a sole trader, but later on they may also employ, let's say, even one or two people, three people. Three people per company is still a very small company, but we are still talking about three persons who have gained their employment. And it's a significant boost for the economy as a whole because unemployment is a hot button issue for all of the countries everywhere. Another topic I would like to discuss in here is the organizational structure of an enterprise. The organizational structure of an enterprise is an important issue and it's highly dependent on the sector. However, an efficient organization, an efficient enterprise needs to have a correct organizational structure and organizational division and the right allocation of tasks in between different parts of the structure. So, first of all, an organizational structure typically starts with the management board that directly manages an enterprise. I do realize that often a management board would have a supervisory board to which it responds, and the supervisory board is the representation of owners of the business. Well, obviously, it depends also on the structure of ownership, whether it is more dispersed or more accumulated in a limited number of hands. So, one person, one institution may have a controlling share in a company. However, if we go down from this management level, we need to think that obviously there is the management board and the supervisory board. The supervisory board is responsible for appointing management board members so that they could work efficiently and meet the expectations of the owners, of the shareholders, and obviously of the supervisory board. As a result, the management board is responsible for the operations of the company as a whole. And management board is composed of single members and it's directed by the president of the management board. But typically, every management board member is responsible for a single division of the company, for a single area of the company's operations. Management board members, including the management board president, select persons who would be responsible for the creation of a structure and for the management of a lower level structure. A person that would be responsible, for instance, for accounting and bookkeeping. Such a person needs to organize the entire bookkeeping department. They need to be responsible for the persons who will deal with documenting and clearly presenting the economic situation of the company. And for instance, we will also have a management board member responsible for manufacturing, for production. This person would be responsible for employing relevant persons, for training them, for procuring machines, so that these persons are able to perform their tasks. And as a result, the responsibility of such persons are divided. and every single management board member is responsible for something. For instance, there should be a management board member who would be responsible for the sales, and this person will recruit and employ people who are good salespeople who will be able to sell the products or services offered by the enterprise. So I believe that these are the three most basic divisions in a company. But obviously, in every single sector, you would come across some specific areas. There is no place that would specify in a rigid manner the number of the management board members. So the size of the management board results from the specificity of the operations of the enterprise. And the selection, the recruitment of the management board members and of employees is very important because it is a factor that generates a lot of costs. So if there is a management board member who doesn't have an area of responsibility or whose tasks actually coincide with the task allocated to another board members, we may expect some conflicts, but more importantly, we are unnecessarily generating costs involving the creation of the structure and obviously the overhead in the form of the employment costs, salaries of such a person who is actually not needed. In some enterprises, we also have divisions responsible for investor relations, for other matters, for instance, for administration. But as I have already said, it depends on the specific sector in which the enterprise is operating and on the specificity of its activity. Importantly, a structure should be formally described, formally defined. So it shouldn't be created ad hoc, for instance, by every single management board member in a way that doesn't really contribute to the overall whole. So there shouldn't be these independent units that do not fit together. We should really ensure that it be coherent. In this way, we will avoid the overlap of tasks, many conflicts of interests, even within every organizational structure. If we have a unit that is tasked with control, with auditing, even in smaller structures, in smaller companies, there might be a person responsible for audit. In this case, we always need to ensure that the auditing structure or the auditing person cannot really audit any tasks that it performs itself. So, any areas where such audit of the unit by the unit itself would generate the risk that certain irregularities would not be disclosed. So the structure should be formally defined, and importantly, we always need to understand the dependencies in between the various members of an organization. We need to know who the boss is. It is important to emphasize that It is important to emphasize that one should also always go along the appropriate corporate path without bypassing one's boss. So if I have a problem performing my daily activities, I should always communicate such problems to my direct superior. I shouldn't really bypass my superior in any case. If my superior is unable to help me, I should either look for a solution elsewhere, or I should determine myself what is the best person who could address this issue. There is also the matter of conflict of interest. If there is a conflict between me and my superior, I should be able to contact, to speak to another person about my problem. Because if the conflict involves my direct superior, I cannot really solve it with my direct superior. So there should always be an appeal institution within a structure. And in such a case, it would be justified, it would be reasonable to bypass my superior and go somewhere up in the structure, for instance, even to a management board member. But such a possibility should be always formalized so that everybody within the structure is aware of this official path of appeal. Because if I bypass this official structure and this path of appeal is not formalized, I violate the rules of the structure of an enterprise.
So it is definitely a good idea for an enterprise to have a unit responsible for handling such situations like appeals, conflicts. And therefore, companies usually refer to external legislation. For example, in Poland, the banking law says that every bank should have a system for automatic and individual notification of irregularities, and the system should be unanimous. This is the so-called speak up system, and this is regulated by the internal codes. I'm speaking about the banking sector, but generally other sectors are also follow the same rules, and they perhaps do not have such regulations they can fall back upon, but they use some individual bespoke solutions that only function in an enterprise. And so just to finish about the organizational structure, let me say that organizational structure can encompass more than one enterprise, but it can extend to affiliated enterprises. So here we can see a chart which I allowed myself creating, and this is an organizational structure in the mining sector. This is the Jastrzębska Mining Company, and we can see the structure, and we can have the individual mines that are affiliated with that mining company. So we can see the management board. It's marked with the red or orange color on the slide, and the management board is responsible for the operation of the entire enterprise, including these individual mines. The management board reports to the general shareholders meeting and to the supervisory board. The supervisory board is elected by the shareholders meeting, and their role is to supervise the work of the management board. But and also it composes certain documents to which regulate how the management board operate. For example, the rules of the management board operations. The management board also is responsible for the board of directors, for advisors, and for the plenipotentiaries of the management board. As for the board of directors, we can see on the left-hand side, it is a body, it is a governing body that is expected to provide data to the management board about the situation in the sector and data about the individual elements of the organizational structure, which means the individual minds. They do not only provide information, they also come up with proposals. And we will come back to that when we will be discussing the financial statements later on. But to be, let's say it openly, that each analysis must be accompanied by conclusions, and the management board may accept or reject such conclusions. The next level are the advisors, and they usually provide consultancy and advice on a number of sectors of the economy. They analyze the business environment in which the enterprise operates, and they propose certain solutions. And the plenipotentiaries of the management board is the next level. It is mostly the proxies, the attorneys, in fact. They represent the management board in certain areas or affairs, and that the management board entrusts them with. So without plenipotentiaries, the management board would be overloaded with tasks, and they usually sign these plenipotentiaries usually responsible for signing some standard agreement, not involving any risks. Each entity is represented by the management board. But if there is a company that is really complex and has many employees and sells its products based on a product or services based on contracts, it may turn out that on an average day a company enters into a dozen or several dozens of contracts. So they need those plenipotentiaries and those proxies to simply enter into those agreements and into those contracts on behalf of the management board. And they trust those proxies to sign and enter into some simple agreements, framework agreements, and agreements that conform to certain standard templates, because I cannot imagine that a proxy would be trusted with signing a very complex agreement that is the result of long-term negotiations. On this diagram, we can also see the office of the management board, and we also see the supply chain department and those individual minds I mentioned: Sofiówka, Budryk, Jasmos, Krupicki, Pniówek. This is a very general structure, and there is a clear division, and there is a clear assignment of tasks. This is an example of another structure. In this structure, we can see there are the deputies of the president of the management board. There is a clear division of duties. So, the president of the management board directly oversees the organization and management office, which means the secretarial office and other services. But it also oversees the human resources management office. It also oversees the strategic development office, because the strategy is a very important phenomenon, because it defines the direction in which an enterprise goes. This is very important and crucial. From recent events, we know that strategy is very important, and it's very important also in the mining sector, which is facing a major transformation right now. There is also the so-called Investor Relationships Office. It is based in Warsaw in this case. Contacts and relationships with investors is a very vital and important issue, because the investors help to increase their equity. They simply fund and invest in an enterprise, and in return they expect the company to generate profit, so that the capital they invested has a certain rate of return. There is another office, it's called the legal office. Previously, I mentioned that sometimes companies sign very complex and difficult agreements that are the result of many difficult negotiations, and it's usually the legal office that reviews such agreements and contracts to find out any gaps or any problems in such documents, because if we have a defect, a formal or legal defect in an agreement, the company may incur heavy losses, for example, may incur some liabilities, which is a very crucial issue. In this structure, we can see a deputy of the president of the management board responsible for labor and social policy. And there is only one office that reports to that deputy, and it's the Office of Employment, Salaries and Social Policy. And there is also this Human Resources Office that directly reports to the president of the management board. So why would we have two different offices doing more or less the same job? And the explanation is that the Human Resources Office is managed by the president of the management board, and it defines the need for human resources. It defines how human resources should be allocated or distributed. It is also responsible for employing people, and also letting people go. But the employment office is responsible for those detailed issues. For example, they have a request to hire 50 different people, so they go out and look for suitable candidates, negotiate salaries, and hires them. When negotiating a salary, there is usually either a just a negotiation, and people working at the same job may have totally different salaries because one person was simply better at negotiating, has better negotiating skills, or there can be a different policy in an enterprise. There might be fixed salaries, and you simply refer to a certain grid. You look at the chart and you know that this person employed at this or that position will have this salary. So these are the two different concepts to remuneration. There is also this hourly rate which can be applied, and it may turn out there is a different number of hours in a given month. So the salary may end up not being exactly how it is written in the remuneration regulations. But there are also rates that depend on how many products you manufacture, how many things you make. And of course, if a company has more contracts, that can have an influence on how much people earn in the company. Yeah. There is also time. I analyzed controlling some time ago, and I had a case study which showed a company, an enterprise with a large, huge production hall, and it had a lot of expenses on electricity, on heating, and there was a person expected to analyze the expenses and come up with certain proposals to optimize the costs. And this person said that the enterprise would be able to save on electricity if only they clean the roof of the manufacturing hall because it was a glass roof and they would be able to get so much natural light if it wasn't that dirty. So that roof had to be cleaned, and such decisions should always take into account the profit and loss account. So keeping a large roof clean, it also comes with expensive. You also have to pay certain money. So we have to look at both sides to analyze what's more beneficial, what's more profitable for you, to choose the option that is less expensive to you. The controlling department also defines how a manufacturing process is organized, because if you have a number of products and you generate a different margin on those individual products and you incur different expenses, so you should focus on manufacturing those products that generate the better margins at lower expenses. This is more beneficial for the enterprise, and this is what the controlling department is responsible for. There is also the financial office that provides financial analysis for an enterprise. They also fill in certain returns that are required by the tax office, but they also have other tasks to complete. They are also responsible for the so-called management reporting, and this section of their operation is about reporting financial information to the management board. Sometimes this is that sort of data and information is not required by the tax offices and other governmental agencies, but they simply have to be produced for the management board to inform their decisions.
I poświęcana jest właśnie, żeby sprostać tym wymogom
So this work
podstawowym, czyli wymogom
is typically aimed at complying with certain legal requirements of the duty to file certain returns with tax authorities so that the taxes could be calculated and so on. So the companies calculate themselves what the due taxes should be and they're obliged to pay them. And as a result, the deputy president for economic matters is responsible not only for the tax settlements, but also for finance management in general. We are going to go back to this topic and discuss it a little bit more broadly when dealing with the financial documentation. And then finally, the deputy president for trade, for sales, actually. So we have the department responsible for the sales of coal, and this department includes all of the distribution channels and the relationships with trade partners, with clients who purchase coal. Then we have the department of the strategy of the sales of coal byproducts. So the mine has divided its products into several categories. What is the reason for establishing as many as two sales departments? Well, usually, probably, these products are being sold to two different groups of recipients, and perhaps there are different strategies, sales strategies in place. Then we have the Department for the Mechanical Processing and Coal Quality. It is an important unit, an important organizational unit for every single enterprise, not only in the extraction sector, because we're talking here about quality, the quality of the products that we sell. Nowadays, in many sectors, quality is much more important than the price. Why? Because higher quality means higher efficiency, higher effectiveness. We are meeting here today. We need relevant equipment of appropriate quality to communicate. Without it, we wouldn't be able to meet. We understand the importance of quality, of buying products of relevant quality to be able to function efficiently in the market. And then one more deputy president of the management board for technical matters. So we have the production division and the investment and development division. And insofar as the production division manages production, this office, this division needs to be in close contact with the sales division. Very often the production volume is closely related to the sales volume in many sectors. If we produce too much goods, too many products, the enterprise has to pay the storage costs. And here we are going back to the deputy president for economic matters for the controlling division, because this department needs to analyze the possible levels of goods inventory that can be stored. In the case of services and service enterprises, there's problem doesn't exist because services are being provided at request whenever they are ordered. But obviously, the costs need to be analyzed, and the investment division and investment and development division also plays in here a very important role, because every company in every single sector, including the extraction sector, in order to improve the quality of its own products and the efficiency of its functioning, the effectiveness of its sales, needs to be up to date with the new investments, the new technologies, because only the new technologies will allow them, any company, to survive. Talking about new technologies may get older by law. This is clearly visible in the automotive sector, because new cars that are being manufactured today need to meet increasingly high ecological standards in terms of the allowable levels of emission. So today you cannot sell a new car that meets norms that were established 2 or 3 years ago. These norms are being increased every single year. So if companies do not invest in technologies that allow for lowering the emissions, they may not so much become less competitive, but simply lose the ability to sell new cars in the territory of a single country, or in our case, in the territory of the European Union, because such norms apply to the European Union as a whole. In consequence, the investments in the development of every single enterprise are extremely important. And here we have the Management Board Support Office. As you can see, it is not attached to any specific Management Board member, but to the Management Board as a whole, as an authority. And for instance, every single person who is a management board member may request certain services of that office. Now, the environment of the enterprise. When it comes to the classification or the division of this enterprise, because we can define the environment of an enterprise as a sum of factors and processes that occur and function in the environment of the company. So we are talking about clients, we are talking about suppliers, about legal regulations, about different laws that govern the operation of a specific company, and about the competitive environment. So the situation regarding competitors in the market in which a company is active. These factors have a very different impact depending on a specific circumstance, but we basically can divide them into factors belonging to closer environment and further environment. We should always monitor both of these environments. Insofar as the close environment is concerned, so we are talking here about suppliers of raw materials, but clients, about intermediaries or agents, companies that supply the goods to their clients, and companies that sell the goods, so warehouses, various types of intermediaries, agents. Competitors
do czego jest potrzebna przedsiębiorstwu konkurencja?
Why does an enterprise need competitors? Competitors are necessary, or maybe let me put it otherwise. We typically associate competition with something negative, but it is important to maintain contact with competitors and to manage such contacts, because it is only then that a company is able to respond to the actions by competitors. We also talk about competitors as a platform for exchanging experiences. Competitors may often wish to share their experiences with us. A company may also share its experiences with its competitors, obviously observing certain strict rules, because every company has some information that form their professional secret, a company's secret that should not be shared with anyone or disclosed to any person. But it is quite common that competitors would organize themselves into fora, into platforms in order to discuss their environment and to share the experiences. Then we also have local governments and local communities. Some of the local communities have direct positive or negative impact or influence on the operation of the companies, and the other way around. Some companies have direct influence on the communities. Sometimes this influence may be negative. The location of a company may be inconvenient to a certain community. I remember that in the past, I visited a company that produced the chickens. There were chicken coops, so there was a lot of inconvenience for the residents. Well, when I was there, the investment was still being developed. It wasn't operating yet, but there was the issue of selecting the right place, the right plot where the plant would be constructed. So very often, to mitigate these risks, the inconvenience, such companies invest in local communities, sponsor a lot of activities. I can say that, for instance, in my sector, small cooperative banks in small towns support local community in a variety of initiatives. And these banks, in their bylaws, in their statutes, they have included the support for local community as one of the objectives of their operations. And then this further environment. So, for instance, it includes demographic factors. So the structure of a given community society, for instance, by age, also by sex, whether it is relevant to the sales of a specific product. The speed, the rate of demographic growth, the more people, residents there are, obviously the bigger the number of potential clients. So the demographic factors are really highly relevant to business. Now, economic factors. So the broadly construed wealth of the clients. It is important for the potential clients to be wealthy enough to be able to afford the products that are offered by the company. Then we have political and legal aspects. So the legal regulations, whether there's the stability of the law, the security of the law. If there is a problem with legal stability, security, the risk increases.
Jeśli chodzi o stabilność prawa, no często
When it comes to the stability of law, companies
wliczają
sometimes sort of calculate or include this risk in the calculations, but it depends on the factor, on the sector, obviously. One of the recent cases is, for instance, the approval of an act that would completely abolish the production of fur animals in Poland. Obviously, such a draft or such a law, the risk of such a law being adopted is a huge risk for the entire sector. Following a number of protests, the fate of this law is not yet clear. But if I were a manager and owner of such a company, I would have to include in my statements the risk that our activity would need to be discontinued. Obviously, lobbyists, persons who try to persuade politicians to take certain decisions will play an important role, and they obviously try to convince decision makers that the sector should be allowed to continue to operate. However, it's quite difficult to predict what the end of this matter will be, and this is a typical example of a huge legal risk, because the representatives of this sector cannot be certain, cannot be sure what their situation will look like in the future. Obviously, the state will take into account the number of persons employed, and if they decide to get away with the sector, they will simply maybe do it gradually over time in order to avoid increased unemployment. However, it's difficult to say what the future of the law will be. So I would like to draw your attention to this simple example. Then we have social and cultural factors. Well, social cultural factors include such aspects as traditions. If we think about Poland, for instance, Polish people eat carp at Christmas Eve, so it's an important impulse factor for the producers of the fish. At Easter, for instance, we eat a lot of eggs. So these social and cultural factors also stimulate and influence enterprises, the decisions that the market and make an important part of their environment. Technical factors, so new technologies and the high speed of changes to the technologies. The technologies go ahead at full speed now. And what is the effect of such changes? We typically use products, for instance, smartphones that are recently bought. It's not that we buy a new one because the old one broke down, but the one that we used to use is technologically obsolete and does not allow us to take advantage of the new functionalities that we would like to use. So these are technical factors. And then we also finally have some environmental factors, so all of the ecological matters that will be specific to a country, as well as such matters as the availability of raw materials that the enterprise needs to produce its goods. And so, insofar as these factors are concerned, all of them play an important role in the functioning of an enterprise.
This is a business model of an enterprise that I've shown here on this slide. The speaker has muted himself for the moment. We still cannot hear the speaker.
No, ale on jest naprawdę...
Czy teraz już chyba mnie dobrze słychać?
I hope you can hear me well. Yes.
Przepraszam.
Sorry
Przerwę miałem.
for this unplanned break in my presentation.
Przepraszam, bo tutaj też...
Sorry.
Już chwileczkę.
Just a few more moments, sorry.
O, już, przepraszam za drobne problemy.
Very well. Sorry for those technical problems, for this short interruption. This slide presents a business model, and this means this shows us how the information flows through the different areas. When a company receives some funds, receives some intellectual capital, social capital, natural capital, and labor capital that are necessary to manufacture a product. And this is the input. And through business activity, we achieve certain effects, which is the end result of what we do. And this result is available to be used for those different capitals: financial capital, production capital. So the capital is present at each stage of the company's operations. And in this business model, I wanted to show you a certain area, and this is the risks and opportunities. And there is also the strategy and resource allocation and perspective. And these three areas need our particular attention when designing a business model for your enterprise. As for risks and opportunities, I mentioned a number of risks we can be facing when we are in an enterprise. And in order to avoid those risks, an enterprise should have an adequate strategy and allocation of resources. It should also analyze the prospects, and it should focus on the results. Please note that this business model is based on the assumption that the customers who can be the recipients of the products or services of an enterprise, they are hugely important to the company, to the enterprise, because they also provide an input to that enterprise. This business model is very comprehensive. It deals with all the areas. It takes a holistic approach to how a company operates. It shows how the company functions and what the resources are and what the outcomes and outputs are. Let me now discuss the marketing.
definicję
I have provided a definition by Philip Kotler,
takie
and
obszerne
this is someone who publishes a lot about marketing.
i tak naprawdę
He's the author of a lot of publications about marketing, and many companies and large enterprises, for example, McDonald's, draws on the experiences of Philip Kotler, this scientist or researcher. He defines marketing as a social process thanks to which individuals or groups achieve what they need or what they want by a creation, offering, and free exchange of products and services. So, selling is nothing else but simply satisfying your needs, your demands. Every human being has their own demands, whether more sophisticated or basic. Some basic needs like food and clothing must be necessarily provided and met, but there are also some more sophisticated needs that we can do without, and we only satisfy them depending on the circumstances, on our level of affluence, whether we can afford them or not. There is also another definition, also by Philip Kotler. It's that marketing is an art of selling products, and marketing is usually perceived as creation, promotion, and supply of goods and services to consumers and organizations.
sprzedaż jest takim
And I mentioned previously that we meet our needs, we purchase products, every human being meets their needs,
sprzedawcy i
and there are good salespeople, and sometimes by good marketing strategies you can create a need, and you may try selling something that we don't really need or we didn't realize we needed. So marketing and ethics do not always go hand in hand. Marketing and ethics, well, we can discuss it for hours. And some of the needs that we're creating by marketing efforts are necessary for humans, but some of the needs are completely useless, even just to drive sales and drive consumption. So, the advisory function is quite crucial here, especially in this respect. Marketing is often perceived through four P's: product, promotion, price, and place, which means distribution. This 4P obviously comes from the four words in English that starts with P. Let's now explain what a marketing mix is. Marketing mix is about what needs a product should satisfy. If a company wants to launch a new product, they research the market and they want to find out how the product is supposed to look like, whether people need it or not. In marketing, a lot depends on the packaging. Sometimes people buy a product just purely based on the how the packaging looks like. So they buy the product with their eyes rather than with their reason. So the appearance of the packaging, the design of the packaging is a big challenge. There was a company, a coffee maker, a manufacturer of coffee, and they didn't know what colors they want on the packaging, and they simply ask the customers what they like, but you cannot ask the customers directly because then you will get all sorts of different answers. Everybody will tell you their own favorite color rather than tell you what color the packaging of coffee they would like to buy. So they invited people for a tasting of coffee. They presented a row of cups of coffee, and there was a different packaging, different color of packaging behind each of the cups. And the people were asked what coffee they like best. But the trick was that the coffee was exactly the same in every cup, and the only difference was the color of packaging standing behind the cup. So most people chose the coffee cup that was in front of the black box. So the company decided to present black on their packaging. So the question was not a direct one, but anyway, they got the answers they needed. Another element of the marketing mix is the price. Price is defined in two ways. First of all, the price must include all the costs and a margin, both for the manufacturer and for the sellers. And this is one way of determining the price. But also, the price must be competitive. So you cannot price your products much higher than those of the competitors because nobody would ever want to buy it. So if you include all your costs, add a margin, and your price is still much higher than your competitor's price, perhaps you should ask yourself a question: is this price the derivative of bad management, or maybe it is the competitors who sell their product below cost and they wish to continue doing so for a certain time just to eliminate the competitors, push others out of the market. So you need to find the balance between the price level and you need to find out why your price may not be attractive on the market. Distribution is another element of the marketing mix. Distribution and place is often related to the supply chain and to your channels of distribution. And
Now the company should answer for itself the question. Whereas the distribution it chooses to engage in is going to be built internally, or whether it will just contract distribution to third-party companies, to some outsourcers. Very often, such companies have their own stores in shopping malls. And in the case of distribution, especially recently, we are observing a growing role of e-commerce. This situation poses certain threats because the goods offered on the internet may differ from what we buy in stores in person. The differences do not necessarily result from the willingness to deceive the customer by the seller, but sometimes the picture doesn't really correspond to the product as we see it in real life. So promotion promotion
Tutaj oczywiście
involves the promotion of sales.
zwracanie uwagi i zainteresowania
So we try to attract the attention of the clients. Then we have advertising, of course, paid advertising on the internet, in TV, sponsorship. So managing the funds, services in an appropriate way so that the company could solicit benefits for its own brand. Very often it involves social marketing, so supporting charities, and the company informs the public that it has provided assistance for a specific charity that is building its reputation. And finally, public relations. Public relations, so brand creation, creating one's image in the outside world, so building relationships with the clients. Very often, public relations are built via person-to-person sales, but also now with the use of social media, the internet. Very often companies, for instance, from the finance sector, they do not really want to train sellers of loans. They prefer to say that they train and employ advisors because the word advisor has different associations. You think about an advisor, you think about the person who helps you. Another concept related to marketing is the concept of the life cycle of a product. I would like to show it to you using a chart. In this chart, we have two lines. We have the sales line, which is the continuous line on the top, and then we have the dotted line that represents the profit, so the revenue minus costs. In the case of new projects, very often the costs are very high, so there is no profit, we are incurring a loss. And the costs that we bear at the very beginning, like the cost of technological testing, certain problems that occur when you release a new technology, a new product that still needs to be worked on. So there's a high ratio of complaints. And after this initial period, normally the sales of successful products, because it takes off, there is an intensified marketing campaign, and during the period of its maturity, the company is simply harvesting the most benefits on the sale, and this sale is going really very well. And then we enter a gradual decline, and the company needs to choose in between two variants. So the first one is to kill the product and engage in the production of something else, or to modify, to refresh this product. So when you observe a decline in the sales of a product, you can identify, or you can a new product, or you can modify the existing product, and in this way prolong its life cycle. In the automotive sector, it is quite common that companies that produce a specific model of a car simply modify it instead of launching a new model. One of the good examples of this uninterrupted production is Volkswagen Golf, which was introduced to the market in the 1970s, and it continues to be modified, continues to be improved, and new versions of it being launched. So there are also some brands that reactivate old models. For instance, Fiat reactivated Fiat 500 Tipo that stopped being produced in the 1990s.
ta linia była prosta i po jakimś czasie, no...
So after some period of time, such products can be, let's say, resurrected. Even though the product from the 90s has nothing really to do with the product that you can buy in the stores today, but there still is the name, there's still the brand, the right association, the trust that the old model managed to gain. And then finally, competition also in this context. Insofar as competition is concerned, it is construed as a process in which the participants, the competitors, aim at obtaining their own benefits and they pursue their own particular interests. Very often such interest, such goal is to generate profit, generate as much profit as possible through high volumes of sales. When it comes to competition, it typically takes place on the basis of quality and price. Now, the importance of quality is growing, but we can't forget about additional issues such as extended warranties, availability of servicing, availability of spare parts. This is crucial in the case of the automotive sector and cars. So each of these issues that is sales related is highly relevant. Not only the price, but also all of the other matters that I have mentioned. And so the environment, the competitive environment, according to Amy Porter, if we talk about competition within a specific sector, there are certain factors that need to be taken into account. So the competitive position of buyers and of suppliers. Now, the competitive advantage of buyers is the stronger, the more suppliers there are. So whenever a buyer knows that there is really a lot of volume of a product in the market, they can choose and pick. That position is stronger. On the other hand, the competitive advantage or the competitive position of supplier depends on the competition in between the suppliers themselves. If there are few suppliers and many buyers, the suppliers have a competitive advantage. And whenever there are many suppliers and fewer buyers, the competition between the suppliers will be more fierce. Now, the threat of new competition emerging, of new competitors appearing, depends on the difficulties with accessing the market. The more investment consuming in, the more expensive the market entry is, the bigger the threshold of entry itself. But on the other hand, if it costs very little to launch a competitive company, the risk of competitors appearing in the market is much higher. Now, the issue of capital cannot be neglected because obviously the more capital one has, the easier it is to enter a market. Now, there is also a threat that substitute products would appear. So these are product replacements, so to say. Well, the choice of such products depends on the preferences of customers. It often happens that in a certain area, for instance, in the case of the food sector, we eat butter with bread, but the substitute product may be margarine or maybe spreadable cheese. So Also, those competitors who do not produce the exactly same product but replacement products may be a threat to an enterprise. For instance, if the trend to eat healthy food gains popularity, some other products will be favored by the general public. So, creating trends, social trends in society is also one of the strategies that one may resort to. Politics. When it comes to the influence of regional politics of an enterprise, we need to say that businesses are one of the key factors that allow a region to develop.
Jeśli chodzi o
Truth be told,
takie uwarunkowania polityczne dotyczące
when it comes to political conditions for running a business in a specific region, well, the political
wydawaniem
authorities influence the market by issuing or refusing to issue different permits, facilitating or hindering different types of activities. On the other hand, an enterprise may also exert influence on the region. Why and how? Because, for instance, the level of unemployment, the level of tax revenues, these are the factors that depend on businesses. So the policy, business policy of a region should reinforce business development, should help people make new investments and create new companies, new workplaces. Insofar as companies are concerned, companies often also influence the entire situation from the geopolitical point of view. So a region has influence on the company because obviously there is a different social structure in every region. So it's different in terms of age, yes, and it's not only about the age of potential clients, but also the age of the workforce. So these social issues are also highly relevant, and business people, investors take them into account when making their investment decisions. So, in this slide, I wanted to show you the various types of influence of the mining industry. So I downloaded these infographics from the website of one of the mining companies, Jastrzębska Spółka Węglowa in Poland. And the company in this material emphasizes its impact on the environment, so on earth, on water, on the air. But it is equally important for the company to emphasize its ties to the community, so clients, workers, partners. Quite often, large companies not only employ their employees, but it forms clusters of companies that provide services to it. As a result, the corporate governance, so the various types of relationship to the environment, the relations in which the company plays an important role and can exert its impact on the regional policy. So it is important also to think about this aspect as well as compliance with general regulations.
nieco już krótszego.
And now maybe let's have a moment of break before we start and proceed to the next part of our presentation that will be dedicated to financial analysis. These are resources thanks to which a company makes money, generates profits. On the other hand, liabilities are the sources of the assets, so the financial sources of these assets, the way with which these assets were bought. So let me show you as a short table. And here we have assets, so various resources the company has at its disposal, and then liabilities. On the left, we have assets such as fixed assets of buildings, warehouses, and so on. Then we have current assets. Current assets include receivables or payables from clients. So the money that is due to invoices that have been issued but have not been paid yet. And then there are the due payments, contributions towards the share capital and own shares of the company. So these are the assets, the resources that the company needs in order to operate. So the machines, the equipment, materials needed for the production. On the other hand, when it comes to liabilities, we have here the sources of financing of the assets. So we have equity, so the own property of the company that the company has. And this capital equity is often equal to fixed asset. It is not a rule, but let's say that we own a factory. Now, this factory has been estimated to be worth this or that. And in the case of our balance sheet, this amount will be entered into liabilities as equities. Then we also have liabilities and liability provisions. So, for instance, liabilities towards banks, towards suppliers, so all of the payments the company must make. As a result, the sum of all assets needs to be equal to the sum of all liabilities. And all of the assets used by the company to produce revenue need to be reflected in liabilities. So, in the sources of financing, because this is what the word liabilities means. Now, the next element of the financial statements is the income statement, also referred to as the profit and loss account, P&L. So it illustrates the profits generated by the company, the surplus revenue. The income statement consists of two parts, so revenues and costs, and it is divided into segments of operations. So operations per se, so the business activity of the company. This segment is the one that allows the company to make money. So this includes a revenue on sales and obviously the related costs. Yes, the revenue on the sales of products that are being produced by the company, or the revenues on the sales of products the company trades in, the revenue on the sales of services, and it also includes some other operating costs and expenses. What are these? These operating costs and expenses and revenues include, for instance, revenues on the sales of assets. Let's think about the company that owns a company. So this car owned by a company is being depreciated over several years. So the company has purchased a car, but cannot really charge it against the expenses, cannot charge it into the income statement just once, and simply has to divide this amount into several annual installments, and this amount is being written off over 5 years during the process referred to as depreciation. So once this car has been depreciated in full, and if the company wants to sell it, according to the accounting books, this car has been fully depreciated and it's worth zero. But in the actual market, the value of the car is different, because a car that has only 5 years old can be worth quite a lot of money. So if the company sells the car, let's say for 30,000 zlotys, the sales itself is posted, is recorded as other operating revenue, so additional operating revenue. On the other hand, if the company didn't want to wait 5 years, but wanted to sell the car after 3 years, well, at that point, the car would not be fully appreciated or depreciated yet. So let's say that it's worth about 30,000 zlotys in the books of the company, but if it turned out that the company is unable to get 30,000 zlotys for it in the free market, but is able to sell it for a lower amount, generating loss and operating loss, the result of this transaction will be posted as other operating losses. So in the books, the car is worth 30,000, but the company is able to sell it only for 20,000. 10,000 zlotys is an operating cost. So, depending on the outcome of the transaction, it would be either an operating profit, revenue. Then the next segment, the segment of financial activity. If a company has some financial surplus and doesn't simply want to keep it on a current account, the easiest way of investing is just opening a CD with a bank, opening a term deposit. You know that now just the interest rates are very low, so the revenue is negligible, but the entire revenue generated by the company in this way is treated as financial revenue. And likewise, all of the other revenue of financial operations are treated as financial revenue. But the company also has some financial costs, such as interest on loans it may have incurred. As a result, the financial activity typically produces a loss. It doesn't mean that the company is in trouble, but the company simply bears the additional cost of financing, but it might be related to its investment activity. We will mention that topic once again when talking about cash flow account. Then we have segment C, extraordinary operations. So some kind of insurance compensations. So something that is beyond the key operations, the key field of operation of the company. So some extraordinary events. And then we have the obligatory charges to profit. So this refers to taxes, obviously. Now, this is a sample form. The speaker unfortunately muted himself once again, so we are waiting for our expert to return.
Mr. Mitchell had the same problem before, and in few seconds.
Chyba przez chwilę nie było mnie słychać, ani widać, ale już... już się udało.
I believe you were unable to see me or to hear me for a while. But returning to our topic, I have prepared for you a sample income statement. So as you can see, it's a table. What do we have in here? So revenues, net revenues on the sales of goods, products and materials. So if it's a trade company, it trades something without producing it, it sells goods. If it produces something, it sells products. When it comes to this difference between products, goods, and materials, well, products also are treated as inclusive of services. So products, this category would include ready-made products or ready-made goods as well as services. Now, in the case of trade companies, we would speak of goods only. And we also have materials. So materials are goods, products that are used for production. Some of them are used to produce goods, and some of them are left with the company to ensure supplies for its commercial activity. Now, the related cost would be the cost of sold products, goods, and materials. So the cost of invoices received for the purchase of such goods for further resale. And then we have some other operating costs that I have already mentioned before. Here we have profit or loss on sales. This is gross profit or gross loss on sales. And below, there are other operating revenues, other operating costs, and loss or profit or operating activity. So it pertains to all of the revenues on sales, costs on sales, and all of the other operating costs and revenues. Then the next section, financial activity, financial revenue, financial costs, and again, profit or loss, and finally, taxes. Now, the third document is cash flow statement. Cash flow statement is an important element of financial statements because it really shows us the situation of the company in particular segments. When it comes to the cash flow statement, the important element are the costs. I have previously mentioned depreciation. Now, depreciation is not an actual cost borne by the company, but it's a settlement of fixed assets over time. In the case of the cash flow statement, well, the cash flow statement takes into account of all of the cash flows in a company in between certain specific fields or stages of production. So we have the operating cash flow stream, the investment cash flow stream, and the financial cash flow stream. In our table, they are referred to as profitability. The cash flows may be negative or positive. If there is a surplus, so there is positive cash flow in the operating segment, we know that the operating activity of the company generates revenues, and we can see that the company is doing well, at least as far as its operating activity is concerned. In the case of investment stream, every plus and minus should be interpreted separately. Why? If we think about investment streams, positive investment streams mean that the company is posting revenues on the sales of its investment that are higher than the cost on the purchase of investments. As a result, it may turn out that the company is selling off its investments. And what are investments for a company? They are the source of revenue. We say often that every company should continue to invest in itself, obviously proportionally to its possibilities. But if the investment streams are positive, it means that the company is selling off its investments. If the company is selling off its investments, it may be doing so because it lacks money to finance its everyday operations. But perhaps it's selling off its property investments to buy newer technologies, to buy more advanced equipment. The same applies to negative investment flows. If the cash flows on investments are negative, the company is, for instance, investing a lot in new investments, the cash flows would be negative. Investments are a positive aspect of company's operations. So negative cash flows on investments are a positive thing because they mean that the company is investing. The problem may appear if the company is investing too much in a way that is inadequate to its capacities. If a company overinvests, it spends too much on investments, and it will need to wait too long for the investments to produce a revenue, or if the revenue is below the predictions, the company may face some problems. It will need to sell it off quickly. And if the investment needs to be sold off fast, it is quite difficult to get a price that would be high enough. Today, in our reality, we may think about individual investments in flats, in apartments. The interest rates are low. Individual investors and also corporate investors do not want to leave their money with banks on term deposits, and they often just buy real property in order to rent it to someone else. If I buy an apartment in order to rent it out, and it turns out that when I buy the flat, there are many potential tenants who would like to rent it. There is high interest in renting property. It means that I can get a good price for my asset. But as we have been observing recently, coronavirus appears and the employees who would rent this flat from me are staying in their hometowns. We are having some technical problems with the input and some acoustic feedback, sorry.
Pogłos. Więc jeśli zmienia mi się
Coming back to the subject, when the price and when the rent I expected to get changes, then I end up with an investment that is not as profitable as I hoped it to be. So can I still afford to keep it up? I ask myself this question. Where can I afford to pay the charges out of my own pocket if there are no tenants in it? Or should I get rid of it quickly? And if I want to liquidate it quickly, I will definitely not get the best price. So the investment streams, you need to be cautious with them and take a look at the big picture, whether your company generates enough revenue to be able to afford and keep up its investment. If investments are being sold, what are the reasons for them? If there is positive cash flow from the investments, why is company selling it? The same goes for the financing activities and cash flow from financing activities. If the cash flow from financing activities is positive, that means the company is taking a loan. So it has additional funding in the form of a loan. Why does a company need a loan? For example, to fund an investment that they plan to make. So this means the company is taking a loan, funding the investment with that loan, which may be a positive sign, but it can also be a negative sign, because if the investment is not as profitable as expected, then the company will have to repay the loan to the bank, and the bank is not the company's shareholder, so they will not want to participate in that investment. They will simply demand a repayment of the loan. And if we have negative cash flow from financing activities, that tells us that the company repays its loans. There are outflows from its bank account to repay loans, and it does not take any new loans. If you regularly repay your loans, it is a positive sign, but it may turn out that if a company only repays its loans over a long period of time and does not take any new loans or invest its own resources in investments, then it may fall behind in relation to its competitors, and it will not invest as much as the competitors, and it may mark the beginning of the company's fall. So I provided a description of 8 different scenarios. We don't have enough time to study all of the scenarios right now, but if you have any questions about any of the scenarios, I'm available to explain. Now let us move on to discussing ratio analysis. What is the advantage of ratio analysis over financial analysis, over simply studying the profit and loss account? Please imagine the company sizes I mentioned previously. A company that has 1,000 employees and a company that only has 10 employees. These two enterprises will have different capabilities and different conditions. This large enterprise will have the possibility to generate huge profits, huge revenues, and possibly huge profits. But this small enterprise with just 10 people, they have smaller revenues and smaller profits. But the ratios tell us a lot about those companies, and I'll be able to compare the effectiveness, the efficiency of these companies. A company with smaller possibilities and smaller capabilities doesn't mean the company has smaller efficiency. It's not as efficient as a big one. So there are the liquidity ratios I want to mention in the beginning. The liquidity ratios, the financial liquidity can be determined on the basis of the ratios. And when we calculate this, we take into account the current assets and the working capital. I mentioned previously that the assets portion of the balance sheet represents the assets that help the company make money. And the liquidity ratios show how solvent and how liquid a company is. So whether it's able to repay its debts and meet its liabilities. Liquidity and solvency are very important metrics. Companies may be more or less sensitive to liquidity, but liquidity is an important factor. It can also be supported by banks. When a bank grants a loan, then they offer money to companies. They offer cash, which the companies can spend and then repay the loan in a one-off go. I said some companies are more sensitive to liquidity and some are less sensitive. Let's look at the banks. For banks, liquidity is highly important because their assets is simply the loans that were granted to companies, and the liabilities are the deposits made by customers. If a bank loses its liquidity, they have no possibility to pay out the deposits to customers if the customers fail to repay the loan. And this is not a very comfortable situation for banks. And that's why banks are very, very careful about their liquidity, and they study the liquidity ratios in much greater detail than other enterprises on the market. For a bank, liquidity is very crucial because the bank must always have enough funds to pay out the deposits to its customers, which does not mean well, because if you have a lot of loans, then it's a good thing because your borrowers repay the loans regularly. There is no need to repay the loan early, and you want to keep up such a customer. Coming back to financial liquidity. We have the so-called current ratio, we have the quick ratio, and we have the immediate ratio. They all refer to liquidity. But what do they stand for? The current ratio, current ratio is the amount of current assets divided by current liabilities. This means, and let me refer back to the balance sheet. So here we have the current assets, and here we have the liabilities and provisions for liabilities. And liabilities are maybe current or non-current. And in the current ratio, we look at the current liabilities. So this ratio, this current ratio, should be within the range of 1.5 to 2.0. This is the most optimum range of this ratio. What does this mean? This means that a bank should have twice as many current assets as current liabilities. Between 1.5 and 2 times as much current assets than current liabilities. This will help it, without any difficulties, fulfill its obligations and meet its liabilities. The quick ratio, here we take into account also the inventories. In the current assets, you usually include inventories, and for the quick ratio, you exclude the inventories. So it's current assets minus inventories divided by current liabilities, and the preferable value of this ratio is 1.0. So the invoices for your purchases should more or less be equal to the so their amount of invoices for purchases should be more or less equal to the value of purchases for you receive for your products or services. So it's preferably if the total of the purchasing invoices is equal to the total of selling invoices, and preferably the payment terms should be similar. And there is also this immediate ratio that represents the immediate liquidity of an enterprise. The best value of this metric is between 0.1 and 0.2, and this represents the amount of funds that we already have. So not the money we loaned to our vendors or suppliers. This is the money we have right at our disposal. So there should be between 1.1 and 0.1 and 0.2. Or this is the best value of this metric. So if one of my suppliers if one of my customers doesn't pay me immediately, and my supplier demands money from me immediately, then I should have between 0.1 and 0.2 amount of funds for me to be able to meet my liabilities if my customers do not meet their liabilities. There are also the profitability ratios we should study, and they tell us about the profits generated by a company. It tells us how well a company is doing on the market, on a free market, in a free market economy. And there is a number of such profitability ratios. And there is the general formula to calculate such a ratio is the effect divided by effort. There is the sales return on sales ratio, and this says how much of our profit is generally attributed to the sales revenue. It does not only tell us about how much we sell, but we also tell us how effective our cost management is. Please understand that if the profit is revenue minus cost, then the lower the cost, then the higher the profit we get. So this return on sales has an important role, because if we compare companies of different sizes that differ very much from each other, this metric will give us information which company can get more profit in comparison to its own revenue. And it may turn out that a smaller company can be more effective, and their profit divided by revenue is greater. That's why the metrics provide us with a lot of information in comparison to just pure raw data included in the P&L, profit and loss account. Return on assets is another profitability ratio, and this represents the net profit divided by total assets and multiplied by 100%. And this gives us an idea of the general capability of the enterprise to generate profit on the basis of its assets. This means the company's profit, a relation between the company's profit and the company's assets. And when we talk about the assets, we look at the left-hand side of the balance sheet, current assets and non-current assets. This is the profit we are able to generate based on the assets we have. And this ratio also applies to different sizes of companies. So you can calculate it for companies of various sizes. Return on equity is another metric we look at, and this is the net profit divided by the equity that the company has. And I am now going back to the balance sheet, and this is on the right-hand side of the balance sheet, and it's here, equity. This is something that the whole company holds. This is not a liability. This is what the company has. It is its own money. Moving on to the ratio analysis, I would like to say that those metrics tell us how effective we utilize our assets. And it's very easy to compare two enterprises of sizes which are completely different. And you can also compare companies from different sectors. And this will tell you which sector or which industry is better at utilizing its own assets. Analyzing the metrics and the different ratios
bardzo istotna
is very important.
dla przede wszystkim
It,
odbiorców.
first of all, provides a wealth of information to the people reading the financial statements.
Obrotu
There is also the so-called asset turnover ratio.
taki,
We
taką zależność, czyli sprzedaż
calculate it by dividing net sales by net assets, total assets, by total assets.
wskaźnik obrotu
This ratio tells us
jak potrafi firma
how well a company can sell its companies. Because sometimes when a company sells companies, they form a portion of the assets. And this ratio indicates
liczbę obrotów
what our turnover is in relation to the total assets.
wskaźnik rotacji
We also have the receivables turnover ratio, and we calculate it for a period of 365 days, and we divide the receivables by net sales.
należności
And this ratio indicates when our customers repay their liabilities, how quickly our customers simply pay us for the invoices we raised. And there is also a very similar ratio, which is the liabilities turnover ratio, and it is simply
będzie mówił o zakupie
a metric that indicates how fast the company repays its own liabilities.
konieczności ich zapłaty, czyli tak
And this simply means when the liabilities that we have incurred mature.
tutaj ten wskaźnik mówi o tym, jak długo ile dni
So this factor illustrates the number of days it takes to a company to renew its inventory.
zapasów do magazynu i
So it's about
niejako wyjście
introducing the materials to the warehouse and then just utilizing them or selling them.
czytanie sprawozdań finansowych.
So when it comes to reading financial statements,
To jest bardzo istotna kwestia.
it is a very important skill for the decision making, for the management process in an enterprise, because
Sprawozdania powinny być
financial statements need to be clear, need to be transparent,
tak to ujmę, zaśmiecone,
and cannot include any unnecessary information. The statements should
zawierać prawdziwe
include true
i bardzo istotne, ważne
and relevant information.
Tutaj przedstawiłem taką grafikę dotyczącą
So this is a chart that illustrates the qualitative measures.
przede wszystkim
Nie wiem, czy dam radę.
sprawozdania finansowe muszą być użyteczne, czyli nie powinno się ich robić do szuflady, żeby tylko odznaczyć, że
So maybe
jeśli chodzi o użyteczność w tym zakresie.
so the usability of the financial statement requires the financial statements to be clear, to be understandable, comprehensible. So the information needs to be displayed and presented in a clear way. It's also important to use clear language that is specific to a certain sector.
Powinny być przydatne.
The information should be useful.
Powinna być dokonana ocena przyszłych.
So we need to assess future, present, and past tasks.
Czyli tak naprawdę W przypadku sprawozdania finansowego,
So, in the case of a financial statement, if we want to analyze a profit and loss statement or the income statements, and we have the information that the company has generated profit of 100,000 zlotys or 100,000 euros, let's use euros instead of zlotys, maybe to be more international. What does this information tell us?
Czy 100,000 euro jest dużo?
Is the 100,000 euros a lot? Is it not a lot?
Po takiej jednej informacji
Having just one information, it is not easy to draw conclusions.
analiza powinna
First of all, the analysis should contain historical data and forecast data.
Ja mam informację, że na
Because if I have information that in a specific period the company has generated 100,000 euros profit, I want to know if this is the peak of its capacities with respect to the previous years, or maybe the profit has decreased. I also want to know how the company approaches planning the future periods.
planuje dalsze spadki.
If the company foresees some further decrease, maybe something has happened in the company's environment, the company has recognized certain risks, and as a result, it forecasts lower revenues or lower profitability. So the financial statements should include both historical data and conclusions.
Tak naprawdę
Then we have the criteria of relevance.
w sprawozdaniach finansowych
So the information that's included in the financial statements
zawierać te
should be
istotne.
relevant.
Akurat nie jest takie proste, najczęściej
This is not so easy because usually the recipients of the information should have the feeling, should be convinced that the statements contain all the relevant information and no important factors, not important facts have been concealed from the reader. The next criterion is credibility. So there should be no major errors, no relevant errors.
sprawozdanie finansowe może zawierać
A financial statement may include certain errors.
wchodzi rolę czynnik ludzki.
We are all humans, so it is in theory the objective to have financial statements that are free from misstatements, free from errors. In fact, it sometimes does happen that certain errors do occur. Financial statements should be verified by another person who audits the statement and checks if it's correct, and it is only following the audit that the statements are submitted to the authorities that will make decisions based on the information provided to them.
O, proszę Państwa, mam tutaj znowu miałem jakąś przerwę, ale mam
I think I still had some technical glitch in here, but I hope you can hear me and you can see me.
Proszę Państwa,
So,
te błędy mogą się zdarzyć, ale
errors may occur, but they cannot refer to relevant information because the author of the statement needs to pay attention to the most important aspects of it and needs to reflect them in the statement. So all of the information should be reflected in a faithful manner without any misrepresentations, without any overinterpretation. They should be represented in a clear, transparent fashion. It's only about giving the information as they are. Now, there should be the priority of content over form. It often happens that there is a lot of irrelevant information added to the statements, a lot of charts, a lot of tables that do not really contribute anything of value. The financial statements should be concise. it should be also neutral. The best solution would be for the financial statements to be drafted by a person who is not in conflict, who doesn't have any conflict of interest with what is included in the statements themselves. So the statements need to be neutral. They cannot really be biased towards any issues, so there might be no conflict of interest. Then there must be the principle of prudence observed. All of the conclusions should be formed in a way that may be proved with relevant evidence. So the financial statements should not include far-reaching interpretations that may turn out mistaken. Obviously, the financial statements must be complete. They may contain all of the information that is needed. So to assess the comprehensiveness of financial statements, companies often draw up their own internal rules that define the formula, the format of the financial statements. In this way, it is also easier to keep the neutrality, and there is no risk that an employee would be very selective in terms of choosing the information they would like to be included. There are just very clear principles regarding the facts that must be in the financial statements. Now, the fourth principle is the principle of comparability. So, the scope of information and the evaluation of the figures need to be comparable. As I have said previously, the recipient of the financial statements needs to be able to look at the company from a broader perspective. They need to have a clear and comprehensive image of the enterprise as such. And there are many different factors that should be taken into account when drawing up the financial statements, and so the comparable periods are really very important. Now, who may be the user, the addressee of financial statements? Investors, first of all. So the market should be transparent and the financial statements should be transparent to the market. So I myself, as a future investor, if I want to buy shares of a company, I should be able to find out from the statements what the situation of the company actually is. Then the second target group are the employees. The employees themselves should be also able to know what the situation of the company is, what is its financial standing. Thanks to such information, the employees may also influence the corporate policy, especially with respect to wages, with respect to remuneration. If the company generates a lot of profit, this can be used as an argument to demand pay rises from the employer, either to all of the employees or to certain individuals, because also individual employees may use this argument in the individual negotiations. So such information is important. It is also very important for trade unions as a source of argumentation in bargaining, especially as regards salaries. Now, financial statements contain information highly relevant to lenders, so usually banks. When a company wants to get a loan, they may get a loan from a bank only other institutions, crediting institutions may grant some other loan facilities, but bank loans are granted by banks only. Banks do not have their own money. They use money that have been deposited by other clients, by a person who keep their money with banks, either on the current accounts or deposit accounts, and the money is often used to grant loans. If you wanted to have a look at the bank's balance sheet, we would need to spend much more time on such a process because banks' balance sheets are very complex. But generally, banks collect deposits from the participants of the banking market and they use the money in order to loan them to other persons. So the banks are obliged to ensure that the institutions or individuals to whom they lend money will be able to repay them with due interest. Now, who else may be interested in financial statements? Suppliers and other creditors. If I want to do business with a company, I might be interested in knowing whether the company is in good standing, whether they will be able to repay me, because if I do not get money back for the deliveries that I have supplied to the company, my company will also be in trouble. Now, the third group includes clients. For certain groups of clients, it might be very important whether they are buying from a company that will stay in the market. Why? According to law, producers may give clients a warranty for the products, but they are not obliged to do so. What is important to me is to know whether the company that has produced the product that they want to buy will be able later on to fulfill its obligations in the form of warranty or statutory guarantee. If I'm buying something, if I'm buying a fixed asset, I am interested in the fact of being able to service this item and the availability of some other services and maintenance services. This is not that much relevant to consumers, because in the case of consumers, it is the liability of the seller to ensure that product, goods that is being sold will be serviced. But also some corporate clients may be interested in checking, in ensuring that the producer, the supplier they're buying from, will be able to meet all of the obligations under warranty. The next group are governments and government agencies.
And this group can use this help effectively and then effectively operate on the market. And it's mostly comes down to all sorts of help and assistance from the government. And there is also the society. In practice, the society hardly ever reads financial statements of large companies. They usually find out information about the well-being of companies from the media. But generally, the financial statements are there available for the public to read. This is all from me for today. As I mentioned, if you have any questions, I'll be happy to answer them as fast as possible, even if the questions relate to business matters or financial matters, which we haven't spoken about today. I'm ready to help you in this respect. Today, we had a little bit of a delay starting the conference, but we managed to cover all the material I prepared for today. I tried, when developing the materials, I tried to provide additional information to what I was saying. I hope the material will be helpful to you, and I would like to thank you for your attention today very much and hoping to hear from you again. Thank you very much. Thank you.
Dziękuję bardzo, panie Michale.
Michał, thank you very much. Can you hear me? Yes. I sent a link to a questionnaire, evaluation questionnaire. I sent it over the chat. It's available in all your national languages and it contains only 3 questions, so it will take you 3 minutes or even less. So please take your time to complete the questionnaire. Anna asked me, can I complete it tomorrow because maybe some people left early? Yes, of course. Tomorrow is fine as well. You can complete the questionnaire tomorrow too and just save the link somewhere so that you are able to go back to it later. Are there any questions from you to Michał, to our expert?
Chyba nie.
I don't see any. So,
tak informacyjnie jeszcze wszyscy Państwo,
just for the sake of providing you with information, all of you project partners will receive some official information about the final conference. It will be held in December on the 17th. This date has been already confirmed, but you will get this information by email. Unfortunately, this will also be an online event like the one today. Sorry, there is no other possibility right now. And this project will be finished at the end of December. So we have to do this on final conference in December too. If you are not convenient with the date, but I hope you are, then tell me. Valentin accepted the date of the final conference, so let's hope it's suitable for everyone and you can all participate. That is all from me. Do you have any other questions or comments? I'm not sure who is still available because your cameras, video cameras, are not switched on. I would like to thank the interpreters very much. We had to extend the meeting quite considerably because of the technical problems. So thank you very much for staying with us. Valentin, would you like to add something? Unfortunately, we don't have the Bulgarian interpretation for technical reasons. That was very impossible to do today. But maybe Lariana is still present with us, who spoke English as far as I remember. I don't think she's still present. If not, then let's hope that we all have an opportunity to speak at the final conference. This will be a conference where the project leader and all the partners will be able to speak in your own native language. Sorry very much, Valentin, for this, for what happened. That's all. Thank you very much. And you can switch off your video cameras. Thank you very much. Goodbye.